Welcome to the deep dive. Today, we're going to be, going beyond the headlines with Wells Fargo, like their third quarter earnings for 2024. We want to see what tells us about, well, the economy and honestly, your money.
Yeah, exactly. We're going to dig into what this banking giant is up to, and like what it might mean for us.
Yeah. So, like, the first thing I saw, Wells Fargo had like a $5.1 billion net income, which is a lot of money, obviously. But get this, it's actually lower than last year. What's up with that?
Well, profits, they aren't always about just raking in more and more money. Sometimes I guess it's more about making less. This decline we're seeing, it's mostly because of their net interest income shrinking. That's the money Wells Fargo gets from like loans. And it's been kind of wonky with all the interest rate changes.
So, like, higher interest rates mean they can charge more, like rent, for their money. But when those rates drop, they can't charge as much. So, less rent for Wells Fargo.
You got it. And this whole shrinking net interest income thing, it's not just Wells Fargo. We're seeing this across the boards. Like the whole banking industry is dealing with the Fed messing with interest rates.
And speaking of things affecting everybody, the report also mentions something about loan demand dropping, especially from businesses. Are companies just being, like, super careful right now or something?
Seems like it. Wells Fargo is saying it's because of economic uncertainty, which, makes you wonder, what are they seeing that's got them hitting the brakes?
Right. A little ominous, for sure. But hey, it's not all bad news. They're doing great in other areas. Non-interest income, things like fees and trading, it's up by like a massive 12% compared to last year.
Yeah, that's what I'm talking about. A total power move by Wells Fargo. This growth shows us that they're smart. They're diversifying, not putting all their eggs in one basket, which is crucial with how the economy is right now.
Makes sense, especially with those loan losses they've got, particularly in commercial real estate. All those empty office buildings gotta be giving them a headache.
Yeah, that's the big, uh, I guess, the big issue they're facing. Wells Fargo's report even admits that the commercial real estate market is a bit of a mess right now, especially those office buildings. More defaults, a shaky future, definitely something to watch out for.
Okay, so with these interest rates all over the place, loan demand down, and some parts of the market struggling, what's Wells Fargo doing to stay afloat?
Adapting. One thing they're doing is, well, think of it like spring cleaning, but for their investments. They're changing up their investment securities portfolio, swapping out the stuff that's not doing so hot for things that might, make them more money.
So instead of just holding on to investments that are just kind of there, they're trying to, actually earn something. Smart.
Exactly. And they're being way more picky about who gets loans now, too, not just handing them out like candy anymore.
Okay, so responsible lending, always a good thing. But then there's this whole stock buyback thing. They bought back like $3.5 billion of their own stock just this quarter. That's showing a lot of confidence in themselves or what?
It usually means they're feeling good, trying to, like, reassure investors. But not everyone's thrilled. Some people think they should use that money for, well, other things like investing in the actual business or their employees.
Interesting. So it's not as simple as saying buybacks are good or bad. There's more to it.
Exactly. It's a whole debate. It
Yeah.
shows you that even when it comes to money, there isn't always a clear right or wrong answer.
Not simple at all. It's there's always a lot to think about. Speaking of which, the report also talked about how Wells Fargo is handling this, kind of crazy economy. They said they've got a strong capital position, which guess sounds like a good thing.
Oh, yeah, definitely a good thing. It's like, imagine a bank having a really solid emergency fund. That's basically what it is. It means they're like more prepared if things go south, unexpected losses, economic downturn, that kind of stuff.
Yeah.
And one of the ways they measure this is with, get this, the Common Equity Tier 1 ratio. Yeah, it's a mouthful. Basically, think of it like a financial health score for banks. Higher the score, the healthier they are.
Got it. So Wells Fargo's score is.
Looking pretty good, actually. It's at 11.3% right now, which is, get this, even higher than last quarter. So that tells us they've got like a nice cushion, just in case things get bumpy.
Okay, so they're being all careful with loans. They've got this like financial cushion you're talking about, and they're branching out, not just relying on one thing. Sounds like they're trying to, I don't know, cover all their bases.
Exactly. They're showing that they, get what's going on in the economy right now, and they're taking steps to, like, not get caught with their pants down, so to speak. Kind of like playing chess, thinking a few moves ahead.
And hopefully not getting into any more scandals,
Yeah.
right? Because, Wells Fargo's still dealing with like the aftermath of all that stuff from before.
Yeah, totally. Trust is like everything, right? And the report actually mentions that saying risk and control work is still their top priority, which makes sense. They've been like pouring money into making sure their risk management, all that compliance stuff is top notch.
Trying to clean up their act, make sure they don't, repeat the past.
Exactly. Win back those regulators and, the public too.
Okay, well, on a brighter note, let's talk about what's it called? Consumer banking. The report mentions some kind of interesting stuff happening there. New credit cards, some deal with Volkswagen, even like makeovers for their branches, which seems kind of funny.
Sounds like they're, really trying to get new customers, freshen things up a bit. It shows they're thinking about like the whole customer experience thing, especially for stuff like credit cards, those auto loans.
And all that work they've been doing to like modernize their app and stuff seems to be working. They said they've got more people using their mobile banking than ever, which, I mean, that's huge these days.
To make or break, right? These days, everybody wants things like instantly, easy peasy on their phones. It's kind of interesting, though, even with everyone going digital, they're still like putting money into those physical bank branches.
Yeah, maybe they're realizing that some people still like, I don't know, actually talking to a person, or at least having the option.
Right, right.
Yeah.
Could be a way to appeal to like all kinds of different people.
Yeah, that makes sense. Now let's get into something that, well, affects all of us directly. How much people are spending. They said credit card and debit card spending is up from last year, but
There's always a but, right?
the-
There's always a but.
it's not growing as fast.
Right.
Could be a sign that people are starting to feel, the pinch, right? Like with prices going up and everything being, well, uncertain.
So not a full-on spending crash, more like what, easing off the gas pedal a little?
Yeah, exactly.
Yeah.
It's subtle, but it's definitely something those what are they called, economists and analysts, they'll be watching it closely, see if it turns into something bigger. Like we're all looking for clues to figure out what the economy is going to do next.
Yeah, kind of. And speaking of clues, this Wells Fargo report, it actually gives us some like bigger picture insights into the whole economic landscape.
So, what kind of economic predictions are we talking about here? What's Wells Fargo saying?
Well, it's kind of a mixed bag, to be honest. They said the U.S. economy is still like pretty strong overall, but there are some yellow flags, like you said,
Mhm.
inflation, that whole slowdown in business loans we talked about, that kind of thing.
So, reasons to be like cautiously optimistic, but also some potential speed bumps ahead.
Yeah, that's a good way to put it. There's a lot going on, that's for sure. It's a lot for businesses and, well, just regular people to handle with the economy being so unpredictable.
It's like, I don't know, trying to walk on a tightrope or something, trying not to fall off while everything around you is like shaking.
That's a good analogy. It shows how important it is to stay informed and be ready to adapt for businesses and for our own personal finances too.
Totally. Okay, so as we wrap up our deep dive into Wells Fargo's earnings, what's the main takeaway for our listeners? What should they be thinking about as they go about their day?
Here's the thing. I know all this Wells Fargo stuff might seem like, I don't know, just numbers and financial jargon, right? But it tells us a lot about what's going on in the economy right now.
Mhm.
Interest rates, how much people are spending, that whole thing with commercial real estate. It reminds us that everything's connected.
Mm.
What happens in the financial world, whether it's like a bank reporting its earnings or the Fed doing its thing, it affects us, all of us.
It's like that saying, money makes the world go round. Or maybe in this case, it's more like understanding money helps us understand the world.
I like that. It's all about connecting the dots. Like, how do those big financial headlines, how do they actually affect us? Like how much it costs to borrow money. Are there going to be enough jobs? Even just like what we decide to buy at the store.
So, like they say, knowledge is power, right? The more we know, the better we can deal with, well, whatever the economy throws at us.
Exactly. And speaking of knowing more, we've covered a lot today, but there's always more to learn.
There always is. So, for our listeners, here's something to think about. You know how Wells Fargo said those business loans are slowing down and how that might mean the economy is uncertain? Well, what can businesses and regular people, what can they do to get ready if things do get a little shaky? That's something to chew on, maybe do some more deep diving of your own.
Yeah, definitely. Stay curious, ask questions, and never forget, finance, it doesn't have to be boring. Not at all.
That's right. And on that note, we'll wrap up this deep dive. Until next time, everybody.